But hey, happy Tuesday, everyone. Thanks for joining. Let's go ahead and kick it off with wins for the week. Let's start at the top here. Got a win for the week?
Nothing big. It's just phones getting busier, even though it's the economy's not doing great. Rates aren't doing great. Still getting phone calls. Still doing the grind. Attending meetups. And still going. The phone hasn't been quiet, so that's a good thing.
Yep, that's good. Keep the phones ringing. But on that note, don't be passive. Don't just wait for calls to ring. Make your dial outs. Who else is on? Who's producing? C.
Good morning.
Good morning.
I actually have a pretty funny story. So I have this agent who I've been working with for past couple of years. For like the last year, she just disappeared. I don't know if she retired or died or something, but I reach out to her on a regular basis and just nothing. So yesterday I get a call from her and she's like, "Hey, I got a referral for you. So it turns out she just took a little break. But just a reminder out there, even if they're not responding, continue with reaching out to them. Stay top of mind.
Yeah. I'm a piggyback off yours. Who else here? I do apologize. Who's the other producers here? Is I don't know, Julie, Michael, William. Are you guys on the front end with us or?
So we're loan officers. We're trying to produce, I guess, because we're new.
Right on. Okay, good to know. I'll make sure I'll pick on you shortly then in the coming weeks.
All right, sounds
take
good.
a few things or two. Yeah, I actually it's funny. I have the same. I have a few, but story as C's. Ellen Capino, don't mind mentioning the name here. Maybe I shouldn't have. She's my number one agent, and she has been for about 6 years or so. She is responsible for a very, very good portion of my commission every year. I'm very grateful for her. I haven't heard from her in about 8 months, and I do follow her and track her on social media. And she's been out there traveling, got weddings and whatnot, quinceañeras and whatnot. She's a little older than I, and on a Friday afternoon, I was having lunch and I just randomly text her, and she calls me immediately, and she goes, "Oh my God, Ragnar, long time." I was like, "Oh my God, Ellen, it's been forever, right?" I mean, this is 8 months of no communication between us, and I'm telling you, we would deal. It's not unusual to do 10 to 12, 15 deals a year together. And she's like, "Oh my God, I've been meaning to call you too. There's a client, Nona. She's back in the picture. Our team." Long story short, that Friday afternoon, client submitted her package. Our processing team has her file right now as we speak. She's making a bunch of offers. And talk about manufacturing homes, right? We just talked about this last week or 2 weeks ago. It's a hot commodity right now. I think it's a hot marketplace because price of homes are very elevated right now. So I think home buyers are looking for other options, mobile homes, manufactured homes. We're seeing lots and lots of condos. So yeah, we're they've been pre-approved. Echoing what On said, if you are a loan officer right now, you should be busy. Okay. And we're going to go through a few things, and I don't want to take away too much of the presenter's time here, but I want to show you guys some articles. It's a very, very, very busy market, guys. You guys all agree? There is a lot happening. Even if you're not producing, there's just so much to take away in the marketplace right now. So I'm going to just share it, but skim through some of this here. Because it's so relevant, and it's great when you as a loan officer, you're literally in it and you're experiencing what articles are saying, right? It's like it's a great feeling, right? Just to be almost give you that assurance almost, right? So what's going on? Obviously, rates are high, right? This is the highest rates we've seen in a really, really long time. We've had now 4 straight weeks of rates going up, and ultimately, right, we're seeing but we have seen the rates come down here and there, but what's really going on? Well, one, we know the war is going on. 2, We know oil price, as a result, oil prices going up. Fed chairs coming out saying, hey, inflation's okay. So that kind of, it buffers the rates coming back or going up. Then we have Fannie, Freddie saying they're going to intervene and buy back mortgages. Okay. That's a good thing, right? Whenever we hear an entity, especially the government or someone intervening and saying they're going to buy back mortgage bonds, it's a good thing. When was the last time that happened on a significant, a very, very wide scale, significant amount? Anyone know when the last time that happened? When an entity intervened and bought back mortgages in a substantial amount. When was the last time, guys? Anyone? COVID, right? They bought like trillions of dollars, I think, right? Bought back in. What happened? What kind of rates did we see?
Below threes.
Yeah, the lowest in the history of the United States, right? So there's some of that's going on right now that's needed, right? We need help right now because of all the other things that are going on. Investors are retracting away from the stock market, ultimately causing mortgage rates to go up. Here's another big one, okay? Broker shares how poor lender communication can derail mortgage deals. I cannot tell you right now, okay? I'm not going to mention the group. I cannot tell you how many referrals I have gotten because the agents are upset with their current lenders and their lack of communication or improper communication, okay, or communication of misinformation, I should say. And so they're sending it my way, okay? C, on, other producers here, would you guys agree, right? Communication is the backbone of, forget the girls, this picture of this lady here, but the communication for a loan officer is so crucial, especially in times like this. Why do I say in times like this? Can anyone give a stab at what do I mean by why communication is so important in times like this? Anyone want to give a crack at it? Let me help you out. Do we have an abundance of transactions or a lack of transactions? Anyone? A lack, right? Because there's less transactions going on, loan officers are all fighting for the few that's out there. And when we are all fighting for the same deals, guess what? We kind of lose ourselves in that, right? We become a little bit more salesy. We try to cut the corners a little bit, right? We tend to overpromise, underdeliver. We tend to talk a little bit more, or we refrain from providing the necessary information to just get the deal in escrow or the deal in your pipeline. Correct? Right? I don't know if you guys are feeling that. I'm already, like Peter and I are dealing with this one that we had with a condo where the lender actually was against one of our loan officers and omitted the fact, priced them out on an SFR. And for me, I don't buy it, right? Because what do we do as loan officers? When someone's in escrow, we Google the property address, right? Or we read the contract, the purchase contract, right? Or we get the title preliminary report, right? Or we have to order the appraisal, right? My point is there's a billion and one ways we're gonna, identify whether this is an SFR or a condo. Well, this lender decided to price it as an SFR and keep it that way all the way through approval conditions, and then decides to say, oh, we didn't know this was a condo, but this is a condo. Right? Things like that, right? Or the lender not communicating properly that, oh, because this is a condo, now we have to order a HOA cert near CTC, right? These are all mistakes that should not happen, but it's lack of communication, okay? So don't be that loan officer. The takeaway here is whether it's good news or bad news, okay, always deliver it. Now, on that note, if it's a bad news, always wait 24 hours. That's a rule of thumb that I try to abide by because as loan officers, especially in a setting like this at Giving Tree, you want to give it time to see if you can find a solution first. Okay. So sometimes, Yes, communication is good, and immediate communication is even better. But sometimes it's okay to take some time, see if there's a solution or a workaround before you deliver that bad news. Hope that makes sense. Third thing, fewer marketers. These are headlines and articles that I read that I thought was really pertinent to us. Fewer marketers, more professionals. I love that. Do you know why I love that? Because it's not a matter of differing opinions here. You would think that, right? Like, I'm a little bit more old school. We need more professional loan officers. I could sit here and say, when I look at the landscape of loan officers, there's not enough professional loan officers. Okay. However, someone else from a different perspective can say, you know what? It's all about marketing. Get on social media, right? It's info, lead generation, right? And this article is saying we need fewer marketers and we need more professionals. And initially when I saw that, I laughed because I understand that, right? There is that loan officer and he claims he does $100 million and he has 3 stories, 3 reels, 3 posts like every single day, right? And it looks like, oh my goodness, this loan officer legitimately probably makes 7 figures. And then we go and we search it and I find out, as I did recently, he did $7 million for the year last year, right? So which is it? And it's simple. It's both, right? We need the professional loan officer. What does that mean? The one that communicates and sometimes overly communicates. We need that competent professional who knows their guidelines, right? We need that loan officer who knows how to converse, have dialogue, and communicate with the agents, with escrow, with their own processor or processing team, right? To get a file done effectively and efficiently. That is a true professional. It is a one who holds hands on the client saying, hey, we're okay. We're going to get this. Don't worry. My team has already ordered the appraisal. My team has already ordered the HOA cert. We are on it, Mr. Agent. Don't worry, right? You need the professional, but we also need the marketer. Guys, if you're in this business because you think you can get a deal from your mom or dad, you think you can get a deal just by going around the corner and speaking to someone you know at church or school, I'm here to burst that bubble and say it don't work that way. Okay? It does not work that way. For one, because they know 10 other loan officers. Okay? I can attest to it because I've been doing this for a very long time and it doesn't work that way. You have to put a lot of time into it. But that being said, yes, as a loan officer, I disagree here, but I do take away something from here in the first 2 words. You really are a marketer, okay? That's everything in life, right? Whether you're Coca-Cola, whether you're Nike, whether you're McDonald's, to whether you're that mom and pop shop down the street, a dry cleaners, an ice cream shop, it doesn't matter. Business is about marketing, right? The more you put yourself out there, the better. Now, we have seen an influx of more marketing loan officers than ever before, right? Because I've said this numerous of times, I'm going to say it again. Mortgage isn't rocket science, right? So it is easier, I would think, for that marketing degree guy to go out there and produce all this content using AI about mortgages and blast information and generate leads. The problem is the conversion there, I don't think is going to be great. And I think that's what this article is really alluding to because they don't understand a marketer. If you guys don't understand what I mean, get on a one-on-one with Peter on a call, discuss a file, and you'll know what I mean by you don't know loans. Okay. And I'll put that against any marketer out there, right? I mean it. I as a multi-digit, experienced loan officer, if me and Peter were to get in a room, in a classroom, get one file presented to us and dissect it, I will give you 1, maybe 2 options. He'll give you 50. Okay. Marketers can't do that. Okay, but it is, I do want to stress the importance because we are here to generate leads. Okay, finally, this is more just to keep in the back of your mind. Okay, I'm gonna give you a quick snapshot. 2008 market crash happens. More, we have the housing crashes of 08. 2009 and 10, Obama administration passes the what? The Dodd-Frank Reform Act, right? We now then have qualified mortgage. 2014, we have what? TILA RESPA. Get familiar with these, folks, okay? And we have compliance, guidelines, okay? Finally, Trump and this administration, he tried to do with this in his first term. Bottom line, he miserably failed, okay? He wants to deregulate mortgages. It may not get back to pre-2008, okay? But you guys all know this, right? Fannie, Freddie, those two enterprises, they are government-sponsored enterprises. You guys should know that prior to 2009, they were private institutions, okay? He's trying to deregulate mortgages. And look at some of the things that he's trying to do. They're revisiting the ability to repay, right? Does it have to be defined by DTI, the debt to income ratio that we all hate, right? We get $150,000 earning borrower, Rogner or C, right? Loan officer. I want to buy this $800,000. Blah, calculate. Oh, I'm sorry, your DTI is too high. How many times have you guys all said that, right? And how many times is that the hard news to deliver because they don't want to hear it, nor do you want to say it, okay? Huge, right? Disclosures. How many of you guys, when you're like, process 18, you're yelling at them, get out the disclosures. Sorry, they do a good job of getting disclosures out. But then that's only the first part of the battle. Borrower calls, hey, goes, what are these 120 pages of disclosures? What does this mean? What does this mean? Have you guys been there? Well, hey, they're looking at that now, right? Or have we, as a government, has in the industry wide, has there been too much, an overabundance of disclosures that's even necessary? Okay. This is another big one I kind of touched up on, I think, a week ago or two about capital liquidity standards for the banks. The banks are held to a higher standard. They are trying to ease that. That's not good news for you and I, okay? If the banks start to ease the requirements, guess what? The banks are going to come back into the ball game, into the industry. They've been out of it for some time now, especially since COVID. If they come back, that just means more competition, okay? But, banks do want to be in lending. There's other things here. If you haven't seen these, I'll go ahead and send it. There are rules regarding appraisals and stuff, but again, this is not in effect yet. We don't know, but this is something that the administration is looking at to scale back on a few things that should make lending a little bit easier for you and I. Okay, so I know I took some time up. I do apologize, Peter. There's just a lot going on, guys. Stay on top of it. Be that professional loan officer. Take this material. Go market yourself now. All right. Thank you, guys.